This video is made only for educational purposes. No stock ETF should be bought without advice from your investment advisor.
Top bank shares to buy now. HDFC Bank. HDFC Bank has exhibited a healthy revival in retail loan growth, propelled by a pickup in unsecured segments, while the commercial banking segment has also witnessed strong traction. These have enabled a recovery in NII growth and will support margin growth. The bank has been expanding its presence in the semi-urban and rural regions, which is enabling it to capitalize on the growth opportunities. HDFC Bank is steadily becoming the largest lender in MSME financing. HDFC Bank maintains a healthy market share across digital channels. 80% share in POS terminals, 9% and 27% in debt and credit card spends. About 96% of the transactions occur digitally that enable a strong control on cost ratios. Asset quality remains robust with credit costs undershooting the long-term trend. We expect the bank to deliver a healthy business growth fueled by a pickup in retail business and continued strength in commercial banking business. State Bank of India. State Bank of India reported PAT of 84 billions in Q3 of FY22, which grew by 62.3% YOY, thereby continuing its strong profitability trend. Two major support to the bottom line came from the significant decline in the provisioning cost and contained OPEX costs. NII grew by lower pace of 6.5% YOY. Slip pages at 23 billion remained contained and better recovery led to 40 basis points improvement in the GNPA of 4.5%. Stress appears low while the bank also maintained healthy provision coverage ratio at 70%, providing comfort on the asset quality front. SBI carries a higher provisions coverage on corporate NPAs. INDUSIND Bank. INDUSIND Bank released the findings of external auditors on a independent review pertaining to microfinance advances by its subsidiary, Bharat Financial Inclusion Limited. The review found that a technical glitch led to the disbursement of loans without client consent as a result of IT change management and process gap. The findings of the review are as per the management's expectations. The impact of the lapses and the quantum of exposure is not material, thus ending a major overhang. With the findings of the audit, worries relating to the evergreening of loans in its subsidiary seem unfounded, and the bank is likely to witness a turnaround in earnings.
Share, give a like, leave a comment. Please subscribe our channel